following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and if we sound a little somber here today, we just heard some very dire news concerning one of our regulars on this show. Good old Uncle Mike is off in the hospital right now with his wife, undergoing some pretty dire circumstances. It sounds like she's at least stable for now, so that's good. And I just want all our listeners out there to send your hopes and or well wishes to good old Uncle Mike as they are hopefully in the recovery phase. You want me to give out his email so people can send him emails, or is that
you can send it to info@KnowYourOptions.
Okay, so yeah, let's send your emails and well wishes if you'd like to care to for Uncle Mike to info@KnowYourOptionsInc.com, just to let him know people are thinking about him in this time of family emergency for Uncle Mike. And we obviously wish him the best and hope that his wife recovers soon and that we can see him back on the panel shortly. But of course, we do have an able stand-in for him while all of this is unfolding. Of course, recently dubbed Monday Mike, now filling in on his duties on becoming Thursday Mike as well. Good old Mike Cavanaugh from Know Your Options Inc. Good old Uncle Mike or Auntie Mike / Monday Mike, now Thursday Mike. I also hear it's your birthday today.
It is
kind of a somber birthday, I know, but you're quite the trooper for coming on in light of everything that's going on over there, and of also your own birthday. So thank you for coming on the show today, sir.
Absolutely, yeah, somber mood, but show must go on. We were talking before we got on the show here. There's really no one emotion that sizes everything up, but at the end of the day, we're still here and we work with what we're given. So. The Tusaw family is in our thoughts and prayers, and we'll keep plugging away.
Yeah, I'm so distracted I didn't even introduce myself. My name is Mark Longo from theoptionsinsider.com, as well as many of the programs here on the Options Insider Radio Network. And we are also joined in the Options Express hot seat by good old Rob Kurzakowski. Big Rob, it's been a while since you've been on the show. Welcome back to the program, sir.
It's nice to be back, Mark.
I wish we could have you on under better circumstances, but c'est la vie. Every show can't be a wild party.
No.
Full of drinking and semi-naked ladies. Of course, that's not a bad precedent to set. If you didn't see the live show last week, that's what it was all about. All right, with the panel mostly assembled, we will dive right into the trading block.
The trading block.
And welcome to the trading block. This is, of course, the portion of the show where we discuss what's trading, what's moving the markets, what's lighting up the old tape in terms of activity today. And it was one of those kind of, I guess for the past few months. It's a relatively infrequent quiet day today on the street. Didn't have too much of a range. Stocks ended up mostly up on the day, though slightly. S&P up about 5.5 handles to 1215. Dow up about 37 to 11541. The Nasdaq down about 5.5 to 2598, and the good old VIX cash up about half a point to 34.89. So a whole lot of nothing really going on the street today, which is why I actually took some time this morning to head on down to the old the World Money Show, which is in Chicago today. And did either of you guys, Rob or Monday Mike, I have a hard time saying that on Thursday, but Monday Mike, either of you guys have a chance to make it down to the show today?
Unfortunately, I wasn't able to make it down. I initially, planned on making it down there, but I've just been under the weather, and I don't think that's a great selling point of passing the flu on to people.
Yeah,
as we're trying
working booth babe duty and coughing all over them doesn't usually work very well.
No.
Yeah, I just came back from the show a little while ago, and I have mixed emotions whenever I go to a money show event. And I work with them whenever they come to town. I do a lot of video interviews with them and things. And I try to provide them with some options content. And I like to go to the shows looking for some interesting ideas and seeing what the kind of content they have that might interest our audience. And I was talking to them yesterday, actually, about what they're going to have on their panels, and they were mentioning they might have a regulatory panel. I was like, well, that's really interesting. A regulatory panel for the retail audience. That's kind of interesting. You don't usually see that. And so I went down to the show today to check that out and see what else they had going on. And it turned out on the panel was actually our friend Tony Batista, who was on the live program with us back a few months ago. He was one of the panelists on that regulatory panel, and there was another guy, I forgot his name. But the entirety of that regulatory panel was 25 minutes. So they had a whopping 25 minutes to discuss, I think it was pretty much all the regulations affecting traders as well as high-frequency trading. So
yeah, and I love Tony, and I love what they're doing at Tasty Trade, but, I don't think they're registered. And, anything that applies to anything regulatory, you'd think you'd bring somebody on a panel that it's got some skin in the registered game.
Regardless of that, you think no one could do it justice in 25 minutes. To have a regulatory panel, then to stick it on it for 25 minutes, you can barely get the intros done in that time before you want to really hit the meat. And then I went down to the vendor hall, and I was hoping to see what kind of stuff they had down there. And I was excited, actually, that the first booth I saw coming down the escalator was the smiling faces of Jim and Alex from Options Express working booth babe duty. I thought that was a good sign for things to come. I was like, this is going to be a good exhibit hall this year. They obviously have some interesting vendors. And then literally directly to the right of the Options Express booth was the first guy hawking gold coins. And then you go past him a little bit to the oil well guy who was selling oil well investments and had a briefcase open full of money that he was trying to use to lure people into his booth to buy apparently shares in oil wells. And there was a couple of those, actually, energy companies, both with that same approach of massive suitcases of money open to lure the retail crowd in to buy shares in oil wells. So between the gold, people hawking gold coins, people hawking oil wells and quote-unquote energy investments, and people hawking their, technical analysis thing that completely can 100% predict the market, because why the market's going to go up here. Well, why is it going to go up? Well, because our system has a green triangle right there pointing up. Of course it's going to go up. So
don't worry about that. Don't you see the briefcase full of money?
Exactly. So between those three things, that's pretty much the sum total of the vendor experience and a lot of the content experience, unfortunately, a lot of these money shows. And I keep hoping for them to pull from a little bit, I think, broader and deeper pool from the people who contribute to these shows and put them on. But I always get this veneer of just there's a lot of heavy sales to these shows when you go down. A lot of people really in your face marketing a lot of things that may or may not be inappropriate to that audience. And I definitely things I would never have at, let's say, if we did an Options Insider themed show. I would never have these types of approaches. So I keep looking for interesting types of things, and unfortunately the money show doesn't bring it. Of course, the money show also isn't aimed necessarily at our audience. It's a more general finance type audience. People are going there to learn about annuities. I saw one of the panels was a guy pushing annuities again. All the old things are new again down there. So, yeah. But it's just interesting to see the types of things that are lighting up the tape down there at the money show.
No, and I bet it's a very good cross section. Annuities are hot right now. The word guarantee, which I'll never understand, maybe there's dual meanings of the word guarantee, but if I ever use that word with a return for a client, I'd be behind bars. I'd be delicensed, out of business. And these annuity companies somehow are able to say, there's a 4% guarantee or a 5% guarantee. I scratch my head to really wonder how many people that buy an annuity actually read the prospectuses to find that those guarantees are under certain conditions. And a lot of times these annuities are riddled with options and, long restrictive periods and high transaction fees. So
yeah, that's the thing that cracks me up the most.
To your point, the briefcase full of money. I mean, I've never seen anybody go that far, but we know that sexy investments sell, and a briefcase of money is exactly the message it's always been at those kind of like shows and advertising. And the same point, like, how do you fill a briefcase full of risk? How do you display risk in a briefcase to get somebody to stop?
A lot of Sigma symbols in the briefcase, not exactly as sexy. Yeah, you're right.
Do you put a black swan in a briefcase?
That's what I want to see. I want to see the guy with the live black swan at his booth in a cage. That's I have not seen that yet. There were several people rocking the briefcase full of dollar bills. I don't know who that was aimed at. It was very, very funny. But nevertheless, yeah, interesting developments down there at the Old Money Show. Oh, by the way, if you hit the Money Show I was down there today around noon on Thursday. Very much a gray-haired crowd. Let me just say that. I think I was one of the few people there under 60 at the listening to seeing the panels and checking out the vendor hall. So maybe that just speaks to the time of day and who is available to go to a show in the middle of the day on a weekday. But nonetheless, an interesting event worthy of note. And of course, since we are here in the trading block talking about what's trading, a couple of big names coming out right now after the bell. We're going to kick it off with my favorite. I often refer to it as the other, perhaps less heralded Apple, Chipotle Mexican Grill. At least they used to be about the same price as Apple. Apple has since outpaced them by about $100. They used to be trading around the same price level, around the same vol level, had similar kind of metrics in terms of PE and growth rates, and they were kind of the less heralded Apple. So we used to like trading in and out of them quite a bit. They just had earnings tonight after the bell. Looks like the prognosis is good. They closed around 308. They're trading 317 in the after hours right now. So more upside ahead for Chipotle, and we have a long history with this name. When we got into it, I actually pulled a Peter Lynch on this one. The old story where if you want to investigate the stock, go sit in the parking lot for a while. Well, we were customers of Chipotle for years before it ever became on the radar as a public company. As we watched the growth of it, we said, well, this is just a great name. They have a lot of potential to grow, and so we picked it up way back in the 50 handle range. I think we traded it up all the way up to around 150, all the way back down to about 75 or 60. I forgot how low again, and bop right back up to around the 150 level again before it's taken off to its recent just explosion around 300. But it's a great name. Everyone talks about Apple a lot and the opportunities and the volatility levels and the trading in and out of Apple. But I think Chipotle, in terms of opportunities for options traders and in terms of having a solid underlying story as well, is equally captivating. Auntie/Monday Mike, do you guys play at all in CMG?
The big moves with Chipotle, I mean, you look at I've got a 5-year monthly chart up on it right now, and it hovered around 100 from like 06 all the way to 2010, and then it just took off, and it went from 100 to 300 in 14 months. The one thing I've noticed about Chipotle in the past is it's one of those follow-through stocks. So, I think the numbers came out. I'm looking at the aftermarket right now. Chipotle's up about $10 aftermarket. It's one of those stocks that'll go down and test, where it was pre-earnings, and then it has this tendency to follow through on the earnings. So if I'm an options trader, I might look at this as a stock replacement strategy. Maybe define, how much I want to risk, but try to get this thing on a pullback and, set like a 3-month target on it, because it's had a tendency to follow through on positive earnings. And, maybe Apple will come out with the iBurrito or something, because this stock is, I mean, who would have thought that a restaurant chain that basically sells Mexican food could rattle off like this? It's nice.
Well, they had a lot of good backers behind them. They had a lot of opportunity to grow. For that segment of the market, the fast casual Mexican, I suppose you can call it, it was relatively quality food. So that kind of set them apart as well. And yeah, you're right. This is just a totally postcard cover girl, cover boy name for a stock replacement strategy. We've been doing a lot of those in here over the past few years. Like I said, it is a very pricey underlying. But right now, vol levels are relatively cheap. You can get in on these stock replacements for relatively decent levels and take advantage of some of these. Like you said, it does tend to follow through after earnings, and so it is a good one if you're interested in the rising world of fast casual Mexican, that to dive into the Chipotle train. It's crazy to think this name is at 310 now in rally, actually almost hitting 320 in the after hours right now, which is insane, thinking that so many people thought it was top heavy back at 150 a few years ago, and then it took a downward spiral from 150 right back down to about, I think $50 or $60 or $75 again, and stayed there for a while. And now it's just, like you said, on this last year or so, it's just taken off to the races.
When we sold off back in the financial credit crunch in 2008, I mean, Chipotle actually, it printed a low of $36. So you're talking, if you would have bought it at 36, in after hours right now it's at 320. I mean, that's amazing for 3 years.
Yeah, it's not a bad return. I think it actually broke a lot of hearts too, because it had gotten much higher, then went right back down again. Some people might have just I feel sorry for the people who just had their hearts broken or just got stopped out down at that level because it's done nothing but look the other way since then. So yeah, a lot of interesting activity there. The other big name, of course, coming out.
Might actually have to change the golden apple portfolio to the golden burrito.
Yeah, I'm telling you, Chipotle is the other apple. It just doesn't get all the love. Doesn't get all the hipster love of the folks there drinking their coffees and playing with their MacBook Airs and iPads in the Starbucks. It's hard to wax nostalgic and poetic about a burrito. You can do it about an iPad or an iPhone or a piece of technology. It's hard to really look at the design of a burrito and go on at length at the beauty and the soul stirring impact of that. So yes, the other big name coming out after hours, and there was a lot of paper in this one, and we'll talk about this a little later, but I still don't understand why. Microsoft always does this. Looks like they did it again. Earnings coming out from Microsoft after the close, and it's a whopping shrug of your shoulders. They close at 27. They're trading 26 and the orders or so in the after hours. So a whopping non-event looks like so far yet again for Microsoft. And we'll talk about some of the paper we saw going into that in a few minutes. But I don't know. People still are surprised by this, that Microsoft does this every time. And yet people seem to be, especially this cycle, preparing for something substantially better, and I don't think looks like, at least so far, looks like they have not received that. You guys playing at all in Microsoft, Uncle Mike or Auntie Mike, or do you have any people? I'm sure you had people calling up your desk today, Rob, looking for Microsoft. This is one of the most active of the day today.
Yeah, we saw a wide array of trading strategies in Microsoft. It's on the option front, what we typically see from Microsoft when we're not centering around earnings is a lot of covered call writing, some protective puts and collars, things like that. Not a whole lot of really speculative plays, mainly because Microsoft has just kind of been in this holding pattern or very kind of aggressive scalping, just trying to make a couple pennies here and there. But today we saw quite a bit of complex orders come through, which is kind of rare. I don't remember having a leg more than one Microsoft order in a day, and we actually had quite a few of those come through. So no overwhelming bias one way or the other. It just seemed this is kind of the spurt of Microsoft activity before we kind of die down.
Yeah, that one little blip that Microsoft gets every quarter before they settle into their range again for the next 3 months. I'm talking about Chipotle going 10x over the past year. Always Apple doing something similar over the past 3 or 4 years. And then here's Microsoft with just the lost decade that is Microsoft. It's really amazing. This was such, it's hard to believe that this, killer name from the .com era who was just lighting up the tape back then could just be such a waste of the past decade.
Well,
I will say, go ahead, Big Rob.
It's funny in retrospect, looking at Steve Jobs' passing at Apple, and looking at if you look at a stock chart since Ballmer took over at Microsoft, I mean, it has done absolutely nothing, and that's the guy's crazy, and I'm sure people have seen the viral videos of him, sweating and jumping up, and
monkey dance,
yelling, and dancing all over the place. I mean, they're really, it's very commoditized. basically people don't necessarily upgrade to Windows 7 or Windows 8, which is the next product around the corner. They just kind of get a new piece of hardware that happens to have that packaged on there. I don't think it's just not that sexy of a product. The Office is commoditized and it's starting to suffer competition. Google Docs, OpenOffice, LibreOffice, they're all compatible. So you're just not seeing that they're really not innovating. They just make a lot of products that people happen to use, where the company just kind of stays afloat, but they're not really growing. So I think that's one of the challenges Apple is going to face down the road. Is you had a master salesman and a very innovative person running the company. Now, how are you going to fill that void? Bill Gates, for all his shortcomings, he wasn't necessarily the salesman Jobs was, but he was an innovator, was always trying to push progress forward, and we haven't seen that in the last decade.
That's kind of the problem all of these very founder-focused, very culture-driven, centered around the founder-type companies like Microsoft and Apple have down the road. Is people always say, "Oh, will the next generation live up to the vision and the legacy of these founders?" And the truth is, if you were a Bill Gates or a Steve Jobs, you never would have worked for a Bill Gates or a Steve Jobs. That would just have been a completely untenable situation for you. You would have gone out and done your own thing. So the notion that they can now look into the ranks of an Apple or a Microsoft, find the people who had been working for these people for so long, and somehow one of these is going to turn into the next great visionary leader when they've been following this other person's example for so long. In the case of Apple, really slavishly following the cult of Steve, it just seems kind of funny to me. Not to dive into another Apple tangent like we have on the show recently, but because it is Microsoft Day, so maybe we'll stay with Microsoft. Really quick before we dive into the odd block with Microsoft Monday, Mike, do you want to hit any metals, or should we just dive into Microsoft?
No, I'll make some comments on Microsoft.
Let's hold on then. Let's dive right into, because we have activity as well, so we might as well dive right into the odd block and just hit it all at once. A deep dive, if you will.
The Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we discuss the interesting and/or the unusual activity that is lighting up the tape today. And as you may have guessed from the trading block, we're talking about Microsoft. We might as well take the opportunity when you have it. It's the one time a quarter, perhaps one of the few times a year, where Microsoft is actually relevant from both an underlying and an options perspective. And they were certainly the name today. This stock was just printing paper. They were the volume leader, at least by noon today. They had put up over 300,000 contracts, which was putting them well ahead. They were the most actively traded name by volume of any single equity underlying. And they closed the day over 600,000 contracts, 611,000 to be precise, on a typical volume of about 165,000. I think even that typical volume is relatively inflated for the earnings. So Microsoft just printing contracts today, to say the least. And you're right, with so many contracts going on, it's kind of hard to pull any particular sentiment out of that. But we did see a ton of activity in the ACK contracts. ACK 27 calls and puts the at the money here in October Microsoft closed at 2704. They did almost 180,000 contracts just on that one strike. So these are 1 day to go contracts, putting up 180,000 contracts today. If you add in the 28 calls and 26 puts, the one strike out of the money week or daily at this point contracts, you're talking another 150,000 contracts. You're talking almost you're talking 330,000 contracts just in those two strikes with 1 day to go. An amazing amount of volume. And just to show the diversity of that volume, we have several people writing into us today, our contributors, analyzing Microsoft volume, and they both took completely different tracks. One of them talked about how the paper was very bearish. The other one talked about how the paper was very bullish. We can talk about a few of those right now. If you look at on the bullish side, we had people coming in on these ACK 27 puts. We saw quite a few of these today with people hitting bids or going mid-market on these. So of that 80,000 that went up, quite a few of them were toward the bullish side of the spectrum. They were going up for prices, looks like in the 30-odd cent range for the bulk of them. And yeah, so we said this is midday, about 41,000 had already gone up. They did twice that many towards the end of the day. A lot of those, like I said, towards the bid side of that spectrum, so looking like sales, looking relatively bullish. The OCC 27s also by midday, so these numbers are a little bit out of sync with the total, which was about almost 100,000 contracts just on this one strike. But we saw by midday well over 35,000, already gone up, with about 90% of those lifting offers are going up mid-market. So a lot of buying activity on these two. So if you look at those two, they were just size risk reversals, bullish risk reversals going up essentially in just these two names. And just to seeing so much activity in essentially these front month contracts, as well as the weeklies were nowhere near the number of amount of volume we saw with this 1 day October contract. It really is just that's an amazing number of contracts for a name that will expire tomorrow. And then it's interesting in many ways. It kind of makes the argument for what weeklies were intended for. They were intended for trading in and around single day events like the earnings and other things, other short-term events, and it certainly makes an argument that there might be some interest in a daily contract. I know the options industry has kind of pushed against that a little bit for the messaging requirements and everything else, but given how many contracts went up today in Microsoft, certainly in earnings season, there might be an interest in the old daily contracts. I know, Rob, you already said that you saw a lot of two-sided paper going up in Options Express or at Options Express in Microsoft. Monday, Mike, what's your take on all this Microsoft activity right now, and of course the resulting meh from the earnings? We're still trading 26 in the orders right now in the after hours, by the way.
That's what Microsoft. It is a meh. That's what it is. I think of Microsoft and I think of my grandfather and his buddies sitting around a table talking about dividends, and you think about like what the stock market was invented for, investing in a company that's a stalwart blue chip that is the ocean liner in the middle of the Pacific that takes 8 days to turn a different direction. Like, that's what Microsoft is. It's a blue chip hegemon stock that's paying close to a 3% dividend. I think if anything, with the market environment the way it is, that this is a stock, a flight to quality, call it. You get a 3% dividend, which is beating the crap out of anything that the U.S. Treasuries have in any time frame. And you can get in and out. You can get paid a 3% dividend to be in Microsoft, and hey, add to that dividend, you can sell a call. Buy the stock, sell the November 28 call or 27 call, add to the dividend. If you get called away, great. You make the money, and if you get called away, sell the put to get back in. So I think if I'm a money manager managing a mutual fund actively, and I'm using calls and puts within that actively managed fund, Microsoft is a flight to quality for me. And I get paid a 3% dividend for a stock that really doesn't move that much. I'm willing to take on the accepted risk of the movement of Microsoft for that 3% yield.
If you tack on a covered call to that, you can increase that dividend substantially. And of course, the covered calls, they're paying a little bit here, not much. Actually, we'll talk about it's funny you mentioned the dividend part first. We'll talk about that first, because I remember when Microsoft added the dividend, and it was a big deal. There was this huge tech name, this huge high flyer that kind of personified a lot of the tech boom of the 90s, all of a sudden becoming essentially, like you said, a blue chip dividend paying stock. And it was very much a kind of a culture clash and a shocking moment for a lot of people. Here was Microsoft suddenly paying a dividend like IBM. And so yeah, it's kind of interesting when that day happened. And you're right, since then they haven't really looked back. They've kind of just gone farther down that blue chip dividend yield kind of boring road. Go ahead, Rob.
Yeah, and throw IBM in there. IBM's market cap is very similar to Microsoft's. I think they're both about $225 billion in market cap. IBM's paying about a 1.9% dividend compared to Microsoft's 3% or 2.96%. Microsoft a $26.75 stock versus IBM, which is $177. So, it just looks to me that it's a safety play. I'll be in Microsoft and get my 3%. It's not gonna cost me $177,000 to buy 1,000 shares.
Yeah, and this is one of the few times you can actually, because Microsoft really doesn't move, this is a relatively cheap earnings play. if you think of all the companies that have recently had earnings, your Googles, your Apples, Chipotle, those are really expensive. You're going to be buying a lot of vol premium going into earnings. This was a relatively cheap play for the short-term spec trader. One of the trades we did see go up quite a few times as well is kind of the synthetic long, selling a put, buying a call, maybe with the intention of taking the stock. Or just kind of a short-term play, but we saw quite a few of those go up as well. So it's not, and we really didn't see a lot of covered call writing, which is kind of surprising. We usually see an uptick in activity around earnings, just so people can get those fat premiums. But yeah, I mean, this is one of the few times that we actually see traders, trying to. It's a relatively safe and relatively inexpensive earnings play.
Yeah, it's funny. I hate to sound like a broken record with Microsoft, but every quarter for God knows how many quarters now, if you came in and just hit the at the money straddle, or if you are a condor trader, you write the at the money iron condor, and you could right now look at the straddle went out, the daily 1 day straddle went out for about 82, 83 cents. You can leg into the 26, 28 short iron condor for about 60 cents. And same with the weekly, that straddle went out for $1.20. You can leg into that iron condor. It looks like for about 80 cents there. So I mean, Microsoft is one of the most dependable earnings rights I can think of in the last 3 or 4 years. And you always think, well, this is going to be maybe this will be the cycle that it'll finally break out of that. And yet, if you were a dependable at the money writer in Microsoft, you made out pretty well over the past couple of years at the very least. It's just like I said, a resounding meh almost every time.
Yeah, now, I just did some quick math on this. With the stock at $26.75, you can buy the stock at $26.75, sell the November call for 45 cents. So if it goes up to 28 and you get called away, maybe you don't get the dividend. I think the ex-div date is the 15th of November. So let's say you don't get the dividend and you get called away at 28. You take in $450 for selling the call, and you'd have a price increase of $1.25. If you get called away, you're looking at about a 6% return in a month. If you don't get called away, you get the dividend, you get the premium that you take in from the call. If the stock goes down to 24.5, you're still breaking even. I just see this as a complete flight to quality. Like, here's a stock I can get paid 3%. I can add an additional 2% by selling a call for 45 cents, and I'm willing to take that risk versus getting paid 10 basis points in a 6-month T-bill.
Exactly. You and I have done that first episode of the Advisor Show, which will be going live shortly. But, this is the perfect name. If you're one of these advisors out there right now that's holding Microsoft for whatever reason, you're looking for a flight to quality, you're looking to collect that dividend, and you're not writing covered calls on top of it, then you're doing something wrong. I mean, you're sitting here hoping to collect that dividend when you could easily be generating your own dividend and boosting those returns substantially. So this is definitely type of. And
maybe you're not the guy that sells the monthly call if you're an advisor or a fund manager. Maybe, hey, look at the quarterly. Look at go out to January 12. They don't have a 28 strike on the January options on Microsoft, but you can take in $1.15 for the 27.5. So you'd have the potential for about 75 cents in appreciation. If you don't get called away, you get the dividend, and you're taking in $1.15 on the call. I mean, to me, that makes a lot of sense.
Yeah, and 75 cents of appreciation is a size move in Microsoft land.
Absolutely.
So yeah,
and you're getting paid $1.15 if it doesn't happen.
Yep. Exactly. So yes, Microsoft, an interesting name to watch, whether you're a premium seller, whether you're a financial advisor looking to generate some extra income, or whatever the case may be. And if you're a premium buyer then in Microsoft and you haven't learned your lesson by now, then I suppose there's no teaching you, unless you're hoping that I don't know. You're hoping I don't know. I don't see any premium buyers really printing money off of this earnings announcement here. It's just, like I said, a resounding meh for Microsoft. Yet despite that, a lot of people were diving in today. It was one of the most, if not the most active names today. People hoping, I guess, Microsoft was going to buck the trend today. And then I guess we can get in really quick on this next one. It's from good old BP. Actually, it's kind of a combo trade. It's BP with also another name, which is Total SA, which is Europe's third largest oil company. BP closed at about 41.30 today, up about 54 cents, or about 1.5%. They're doing about 50,000 contracts a day lately. They did about 38,000 today, so a relatively light day for them today. But what we saw was very early in the session, someone came in this Total SA company, and they dumped a block of 8,500 of the May 55 calls. And let me see where, there we go, Total SA. Total SA is ticker symbol TOT, by the way, and they closed at 51.80, up about 85 cents. And someone came in today and sold the May 55s for about 8,500 of them for about $3 a piece, a little over $3. This is open interest of 385 contracts. This looks like opening paper coming into Total SA, and at the same, looks like the same investor came in a few minutes later, about half an hour. Before the total trade went up, about half an hour before, this same investor came in and bought the same size, 8,500 of the April 44s in BP for about $2.45. And these are often referred to as dispersion trades, but look like this guy's essentially taking a flyer on Total, not exactly lighting up the tape, while BP, perhaps the worst days, the days of the Deepwater Horizon, are behind it, and the rally is ahead for BP. I know Monday, Mike, you guys are pretty active in energy. You guys play around in any of these names?
No, we haven't been playing that much. A lot of times we'll start top down, and what I mean by that is, we'll look at the less risky forms of energy. So right now, if we're going to play energy, we're going to just look at the XLE. If we feel like the market is in a less volatile time and we think we have more upside, then we'll start drilling down on the individual stocks within the XLE, like a BP. But we haven't been watching, just with all the volatility recently. I mean, today's a classic example of the volatility, not only in BP, but look at the market. I mean, we're up 5, down 10, up 5 at the end of the day on the S&P. When the market starts showing rearing its ugly volatility head, we start going up the food chain as far as diversifying our risk.
I was looking at a chart here on BP, and there's a pronounced dip way back in April of last year. I wonder what happened around that same time. But they got down to about in the 27 handle range in the worst of the aftermath of that BP fiasco, and since that Deepwater Horizon fiasco, since have been on a relatively upward trend. They got about as high as 56.5 back in January of this year, it looks like, and then I've since kind of held this territory, vacillated between the 50s and the 40 handle. They're down on the lower end of that range right now, 41.32. Looks like at least the call end of the BP side doesn't look like a bad play. I'm not as familiar with Total SA and what's going on with them, if I like the other end of that spread or not. But interesting strategy here for someone taking, we hear a lot of stock pairs trades going up. Here's someone doing that with the options, and you are using a stock, one versus the other type trades, and here's someone doing that with the options in an interesting manner, and in names we don't usually see that much about. So, Rob, I'm assuming you guys didn't see much activity in BP or Total SA today.
BP, we see a little bit of activity. Not so much today. I think with crude oil creeping up toward resistance at 90, this is usually, the world's kind of waiting on Europe for that, for the bailout fund resolution. This is usually when crude oil starts leading up against resistance, like it is right now, getting close to that $90 level. This is when you'll see a lot of people actually go into the oil stocks. The Total SA, we don't see very much. If I don't remember ever taking an order when I was on the trade desk in TOT. But BP, we tend to see a little bit of volume. We really didn't see a whole lot going on today.
Yes, but interesting nonetheless to watch this pairs trade going up in the options here in Total SA and BP. Listeners might want to look at this spread and see how it plays out over the coming weeks. Let's see, this was longer term. This was May and April, so we got some time to watch this spread play out. And that's going to do it for the old odd block today. Now we're going to roll right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is, of course, the portion of the show where the boys from OX regale us with what's interesting, what's going on, what's lighting up the tape over in the land of Options Express. And I know, Rob, actually, I like having you on every now and then because you come on with some of the tech fix for us as well on the OX tech side. I know last time you were here, you teased the impending Options Express mobile app coming out. I do believe... Is that I thought I saw it in the App Store. Is it not available right now, or is it's pending approval? I thought you said here, but I thought I saw it in the App Store. Maybe I'm just imagining things.
When did you see it in the App Store, or when?
I thought I saw it a few weeks ago because I made a mental note of it a week or so ago. Like, oh, it looks like it finally came. Unless it was just an updated version of the existing iPhone one, but I thought it was the iPad one.
It was that was just the iPhone one. That was 1.5.7.
Oh, you know, that wasn't. I think that was an update for the iPhone one. So that's what it was. I think that's the one I'm running right now, and in lieu of a dedicated iPad app.
Yeah. So with OX, with iOS 5, like many other companies that have apps, there were some coding issues. So what Apple had done is they had released the iOS 5 developer kit and the developer code in the emulator, and then they made some changes before it actually went live. So like a lot of other companies, we've kind of been blindsided with some of these issues where our watch list wasn't streaming. So one alternative that we're suggesting to traders, if you are encountering problems on your iPhone or iPad or iPod, is to go to the browser and go to oxwow.com. It used to be we were a little bit behind the times with our old mobile site. It was like one of those websites, the WEP sites where that was back in the Motorola Razr days. And we've since revamped it, so it actually looks a lot like the mobile app. It has a lot more features than we used to have. And there is a bug fix coming soon, so when you see an update, that is the bug fix for the iOS 5. And like Mark alluded to, we do have an iPad-specific app that we have released to the App Store to get approval. We're still waiting on approval as of at least 2 days ago, is when I talked to the development guys here. So depending on what the queue is for the App Store, I imagine with the little bugs and glitches iOS 5 has had, that we may be a little bit delayed in the approval process, but not a whole lot of changes as far as functionality. But as far as layout and how it lays things out, it actually merges some of the modules together, so you can view them very cleanly. The landscape view is, it's literally like having a little computer in your hand as opposed to a traditional mobile app. So are they pulling any design cues from the Extend guys and pulling some of that functionality into the iPad version of the app? Because a lot of that seems like it would be a perfect fit for what you're doing there on the iPad. At this point, no. The Extend runs on Adobe Air, and
yeah, obviously it wouldn't be the same code, but I mean some of the the design and interface elements and tools that you could do with Extend, I think would work pretty well on the iPad as well.
That's something I had suggested to our dev team. At this point, it is a very beefed up version of just the regular OX app for mobile phones. So as far as some of the graphics and merging some content, it's nice because you're going to be able to see news and quotes at the same time, as opposed to having to jump back and forth between modules. So you're going to be able to view a little bit more. But as far as a kind of a redesign, the charts that we actually had embedded in Extend, those are that's the same type of layout that the charts are going to have in the iPad app. So the charts are going to have a little bit more functionality. They're not going to be as feature rich as our streaming charts, but there definitely is going to be. It's definitely going to be a lot nicer. I know with playing around with a lot of the Android tablets, and some of the apps just don't look right. The iPad app is finally going to look right, so you're not going to have these kind of larger than you need to have fonts and things like that. So
it's definitely an understatement on the Android side. I played around.
Is it going to help people
good.
make money trading options, Rob? No, I'm just kidding.
Are you going to have a big briefcase of cash waiting for people when they download the app?
Yeah, with big briefcase of cash. It's that's what people have told me stories about the money show and just kind of things that what to look out for. It's very different than like the FIA and some of the other conferences where it's very professional and there's kind of almost an emphasis on what the exchanges are doing.
Yeah, very different audience too. Yeah, you can see how different people cater those different audiences in very different ways. Not that FIA is above doing a little schlock too. I mean, there were still some booth babes and things at the FIA show last week, but the briefcases of money were absent. But
yeah.
And Rob, I know our listeners are dying to know what the most important feature of the iPad app, which of course will be for listeners of this program, when they can stream and download this show through the OX app. I know they're just chomping at the bit for that. I'm sure that's very high up on the list of priorities of your dev team right now.
You know, that's something that now John and Jim and myself have all pushed the dev team to add, because that's where everything is going with mobile technology. You want to be streaming things and being able to view all your content in one place. That's the reason why we have the little mini browser and Extend, is so you can view websites and view everything all in one place. So instead of having to jump around, you're able to do that. Unfortunately, we have our kind of development buffers here between the product team and the actual people doing the coding. It's my understanding that it is up in the priority, but as far as where it is on the dev track, I couldn't tell you.
Just think of all the synergies that could unfold there. People could listen to like the discussion we just had on Microsoft, for example, while they have the app open on their iPad, and then they could leg into some short iron condors or whatever the case may be, whatever they preferred to do, some covered calls on Microsoft. Just think of all the synergies that could come from that, Rob. Truly, truly a beautiful thing. All right, Rob, thank you for that rundown on what is coming down the pike in terms of mobile apps for OX customers. So if you don't see it in the App Store yet, just wait a little bit for Apple approval. And you're right, Rob, I imagine this is a really tough time to get approval in the App Store right now, because everyone and their mother just updated their apps for iOS 5. So I'm sure those approval guys and all those teams are overwhelmed right now. So it may take a little longer than usual, but keep an eye on it in the App Store, and hopefully it'll come down the pike relatively soon.
Yeah, and on all my social networking sites, my Twitter feed and everything, it is the please help. I screwed this up with the iOS 5 upgrade is screwed this up, and it's normal. Same thing with all the Android updates. That's the reason why there's always the little mini OTA updates for those. So hopefully once that all dies down and people get upgraded to iOS 5. They'll be able to get back and focus on approving apps again.
Sounds good. All right, thank you for that, Rob. And now we're going to close out the old Express block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is, of course, the portion of the show where we discuss what's going on, what's taking up the real estate on our own collective trading screens for the next few sessions. And, of course, we discussed earnings at the top of the show, and it's still earnings time for the foreseeable future. A lot of big names coming out. Let's just do quick after-hours rundown here on what we started off with. At the top of the show, Chipotle right now in the after-hours hovering around 316 and a half, so still looking fairly bullish for Chipotle, and I'm guessing Microsoft still hovering at the meh end of the spectrum. Let's see if Microsoft is indeed, yes, about 2670, still a resounding shrug from the market.
Meh.
Yeah, exactly. Meh. A big meh for Microsoft. So those are the two that were lighting up the tape for today. But of course, next week we have a lot of names coming out. Amazon on Tuesday, the other big tech name. We talk about Apple a lot. Amazon is in many ways the counterpole to Apple right now. They're playing in the hardware game. They also offer a content ecosystem that can rival Apple, one of the few who can. I know, Rob, you play around with a lot of Android devices. I have as well. And one of the things that's always been missing from all of them is that they have no content ecosystem to rival what you can get in iTunes. And now, finally, there's a device with the Kindle Fire that can do that. So Amazon looking a little interesting these days, making a lot of interesting stealth plays on the radar. They closed today at 233.61. The another round of some decent uptrends overall for Amazon over the past few months. Uncle Mike, do you guys play at all in the big AMZN, or is it a little too volatile for you? You guys play in Apple, so Amazon is nowhere near too volatile for you guys.
No, the Apple thing has been, kind of like one of our centerpieces of a portfolio. We rarely step out and just jump into a stock like that unless, we have a really good feeling. Love Amazon. We don't trade it that much. The one that we're taking an interest in, Dr. George put it across my desk right before the show. He said, take a look at this one and mention it. We're going to be watching this one closely, is GNC, the General Nutrition Corporation. They, you see them in the malls and the
those
train
guys
stations.
are still around, huh? Hawking their protein
It's
milk.
Interesting. We're looking at the volume in it. I think, this thing has an average daily volume of about 600,000 shares, and it's been popping over 1 million the last few days, and it's been making some interesting some volume spikes the last few days, and it's been holding its ground. It's got earnings tomorrow, so we're keeping our eyes on good old GNC. Talking
about volume spikes, this name does a whopping 122 contracts a day. They did 318 today, so a 3x day roughly for GNC today, lighting up the tape. And yeah, they have earnings coming out tomorrow. You're right. Oh, before the open tomorrow. So these guys, you already have to have your position on here to play GNC. Looks like we saw we saw a 90 lot going up on the ACH 22 halves today. So that's decent size.
That's big for GNC.
Was that Dr. Duke slinging a 90 lot there?
It was not us. It was not. It was us watching. We take interest in something where we see big volume coming in. Is the volume an individual? Maybe. We're more interested if it's a pattern of funds beginning to invest into a stock where, if they're doing a quarterly rotation and they're kicking some stocks out, if this starts becoming on the radar of some fund managers and they start putting it into their portfolios, that's where we start getting really excited. So we got our eye on it.
What's interesting about that, you mentioned funds maybe picking this one up, is that you'd think maybe this speaks to the general lack of sophistication of a certain aspect of that audience, but you'd think, I'm looking at the stock numbers here, and you're right, the stock is up 2x in terms of overall volume. Yet we haven't seen a commensurate spike. I was joking, we saw a 3x gap up today in volume for GNC, but we haven't seen yet that commensurate lighting up of the tape here in GNC. There is about 1,000 contracts open interest on these Nove 22 halves. So I guess that's a decent amount of volume. That's pretty much the Nove at the money strike right now. So it seems like not too much in the puts. So there's a lot of people leaning in the Nove 22 half calls right now. If you're looking at the strikes that are the most active, that seems to be the one. Of course, dismissing the 700 OCT 25s that'll be gone tomorrow. There's not too much else. Looks like here substantial open interest positions here where you see a lot of funds maybe have jumped in. So maybe that's still to come. Maybe the options volume will follow suit once some of these funds realize and maybe they can get a little more liquidity done in the options than they can in the underlying here in GNC.
We'll see. Like I said, we do like the fact it's been holding its support, and we've seen some volume spikes. So we're definitely watching it.
The other big name coming up on the radar that you and I both have some skin in the game on is, of course, Ford. They have earnings next Wednesday. They close today at $11.70, up about 14 cents. So, already my in-the-money covered call is looking like not the best play. We had scooped some stock nice and cheap on some the short legs of some spreads we had let go to let expire because we didn't mind picking up the stock way in deep in those 9.5 levels. And we've since, on the pop in Ford, we sold some covered calls against it, which we like. It was a good trade. Can't complain, but the stock has since run up a little bit since then. What do you guys still, are you guys collared in Ford, or what's your position going into earnings?
We're still collared. We're kind of more, if it goes up, great. We'll get called away. I'm just going to get you the exact strikes here. We're just watching the downside. We want this to be part of our portfolio. So if it starts going below the 11 level, we'll probably make an adjustment. You caught me a little off guard. I don't have my screen up on Ford, and I'm pulling it up.
That's my job. Throw a curveball to Monday Mike on Thursday.
Yeah, that's what it is. It's the confusion of I'm usually on the ball.
Well, I kind of lean the same way. We've already essentially been called away on. We had written the 10 calls against our stuff, so we're pretty much we're called away at this point. So we're looking at what we can do for Nove to get back in. And I agree, if it starts dipping here, I think we might start putting on some of these 11-10 spreads on the put side or something along those lines, because I don't mind getting back in south of 10, and this is, like I said, a good level to be playing in around. I usually don't go long premium going into earnings. It's usually a dangerous road to hoe, but if the underlying is like this and behaving the way this one is, and we do still have some residual equity positions in Ford that haven't been called away, just because we do trade in multiple accounts here, and we only wrote the calls in one account. So we do have some residual equity that we could then put on some protective puts against to see. But you're right, I do like Ford these levels, especially if it starts moving south of 11 down to the 10 handle again. So I think that'll probably be our next play, is maybe the 11-10 put spread and legging into that for a decent level. Haven't decided yet what we're going to do there, maybe on a ratio or not, but we're leaning the same ways to put on some protective downside and then hope for more upside.
Yeah, you know what? Now that I'm looking closer, we've just got a put spread on. We've got a calendar. You know what? It's a calendar diagonal. So right now we own the Jan 10 puts on Ford, and we're short the front month 11 puts. So if it drops down to 11, short term, we're probably going to make a roll from the Nove to the Dece. But just looking at the Greeks on this position, we're slightly bullish. We've got about a 17 contract position. We've got 138 positive deltas. If it drops below 11, we'll probably make some kind of a maneuver. But right now, we're minorly bullish on Ford.
Interesting. I thought you guys had a lot of underlying sitting around there in Ford.
We do. On the underlying, we just kind of have it hanging right now. There's no collar. Sometimes strategically, we'll pick a couple stocks and say, what's the risk-reward scenario on it? Does it make sense keeping a collar? Does it make sense keeping a put? Ford really hasn't been, for Ford, I guess it's been moving a lot. But if you compare Ford to an Apple on what it could do as far as damage-wise, owning the put going into earnings, we're comfortable just saying, hey, let's take a shot with Ford and see if we can't hit one.
Yeah, exactly. I mean, the covered call aspect, you don't particularly need it at this point, unless you're looking to lock in some gains on the underlying, like we were. And good old Mr. Kurzakowski, what are you watching on your radar for the coming few sessions?
I'm actually looking at more kind of the macro picture. Next week is Tuesday, Wednesday, Thursday is our big days for economic reports. We have consumer confidence coming out on Tuesday. Wednesday is durable goods orders, which is always a big number, new home sales. And then we have the, of course, in addition to the usual Thursday initial and continuing claims, we have the advanced GDP for Q3 and pending home sales. So those are all fairly significant numbers. Some weeks you have a lot of numbers coming out, but a lot of them are really kind of non-event numbers. These are all fairly significant. As far as the commodities, and it seems like the equity and commodity markets are really trying to position themselves, where traders really want to take on more risk, but Europe is holding the rest of the world hostage with the debt talks and the bailout fund. Traders are really looking looking at that, I previously mentioned crude oil just kind of hovering below that $90 mark. Looks like the equity markets are consolidating here. It looks like we're almost ready to break out of that bottom that we formed recently, but there's just no follow through on it. And we're seeing it across different asset classes. We're seeing this in the bond market where we confirmed a double top, but it's since consolidated and there hasn't been any follow through selling. So all signs point to traders wanting to take on more risk, but just not being able to pull that trigger on the follow through at this point, and that's just waiting on Europe. I know that France and Germany couldn't agree this week, so they've delayed. They're having another session on the bailout fund next week. I think that's something that traders are going to be kind of fixated on. We may see some choppy sideways trading activity until that gets sorted out.
All right. Thank you for that, Mr. Rob Kurzakowski. And that's going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. And before we do go, I want to again express our wishes for speedy health and recovery, and hope everything is well with good old Uncle Mike Tusaw and his wife. And again, listeners, you can shoot your get well wishes or concerns or just general well wishes to info@knowyouroptionsinc.com, and let Uncle Mike know that you're thinking about him and his family in these troubled times. But before we go, Mr. Monday Mike, aside from the other things that are certainly affecting all of our thoughts right now, what else, if anything, is coming up on the horizon for our listeners at KYO? Or should they expect perhaps a understandably muted presence on the webinar side, given all the events that are unfolding right now?
Yeah, no, definitely echo the sentiments. Thoughts and prayers go out to the Tusaw family. Next Thursday, we are having a webinar. You can use the same email address if you want to send, Mike thoughts, as well as if you want to find out about the webinar, just inquire at info@knowyouroptionsinc.com. The other thing that we've been doing is just, call it a raising awareness campaign. The title of our company is Know Your Options, but we are a full service advisory firm. So not that we hold ourselves out there as the best or better than your current advisor, but a lot of people haven't gotten the education and the right introduction to investments. And, if you want a free portfolio review, we've got a number of strategies that don't include options that, if anything else, even if we are horrible advisors, we still think we can't do worse than a lot of guys out there. And we're willing to put our time where our mouths are, and we'll offer up a free portfolio review and, break down the costs that you're paying in fees. And if we can't perform, we can at least bring the fees down. So we've been doing a lot of portfolio reviews, just raising awareness to what fees are involved in a typical client-advisor relationship. So if you're interested in a portfolio review, you can go to our website at knowyouroptionsinc.com and click on the stopwatch, request an 18-minute portfolio review, and we'll help shed some light on your current situation. Strategies
that don't involve options? That's heresy, sir. Get off my show. What business do you have on this program, sir? You offend me deeply to my core. All right. And thank you for that Monday, now Thursday, Mike. And good old Big Rob, what's coming up? Obviously, the boys at Options Express are busy right now down at the Money Show doing a lot of education for the people down there. I imagine that's probably on the horizon right now. Anything else coming up, or do you want to just let our listeners know when they could find the OX panels down at the Money Show if they are in Chicago and want to hear from Jim and Joe and the other guys you have down there?
Well, we actually have a workshop at the Money Show on Saturday from 2:15 p.m. to 4:15 p.m. Central Time. In addition to the Money Show, we do have some webinars coming up. Sunday, there was a webinar at 9 p.m. Eastern. It's all Greek to me. That was supposed to be hosted by Mike Tusaw. I don't know if they're going to use a pre-recorded or maybe have somebody step in for him. But something we talk about on the show a lot, the collar strategies, especially with the KYO guys. On Tuesday, we're going to have IRA strategies part 3, which actually goes into some greater detail on collar trades. So Those of you who may not be all that familiar with collars or the finer points of collars, and you hear about them on the show all the time, the webinar is an excellent resource, and you can find that on our website at optionsexpress.com under the Educate section.
Well, thank you for that, Mr. Kurzakowski, and that's going to bring to a conclusion, like I said, this episode of the Option Block. We'd like to thank all of you out there for downloading and streaming and subscribing to this show and making it such a success, and hopefully you'll be able to find it soon on the Options Express iPad and iPhone apps, as well as Android apps and other apps coming to your to a handset near you. But we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.